Way to go, Stacy. Appreciate that. Um, Good question to start us out with, too. Good question. Good question. So if you're new, the format of this call is basically as it stands. How to is the name of the session, and you can pretty much put everything behind that. How do you do something on MetaTrader? How do you uh, use TradingView? How do you take a certain trade style format? It's pretty much anything you do that you guys got questions on. So um, how did we take this trade we just took today? So usually what I'll do is if it is your first time, I like to kind of get your questions first. Um, if it's your first time, go ahead and drop your questions in there. Those guys, you guys can drop a 7 if it's your first time. It's only 7 people on the call, so pretty sure everybody is a little busy. Stasia Snow. Did I say that right? Did I say that right? Station. Okay. Sorry. Sorry. Stasia. Okay. Cool. Just gonna wait around a few minutes. Usually start at like 10 after, just to give people time to jump on. So oh, nice. Long time. It's okay. It's all right. It's okay. So get your notepad out or grab you some tea. Um, we're gonna start in about 10 after and go from there. Also like to learn how to use the Fibonacci. I know how to set it up. I'm training, but not exactly sure what to look for once I draw it. Cool beans. That is a question. Another good question for me. Another great question. So where you from? Where's everybody from?
Hello.
Where is everybody from?
It's Suad, not Saud.
Sorry.
Suad, it's okay. Morocco.
Oh, marhaban.
أيوة.
Marhaban.
Mhm. Maghreb. You've been in Saudi Arabia, you said, right?
I used to live in the Middle East in
Okay,
Qatar
cool.
and Kuwait, and I used to travel all around the area. My cousin
Oh,
actually lives in Lebanon.
okay. That's a nice place too. Have you been to Morocco?
I was supposed to go, but I had to cancel my flight at the last minute.
Um, Maybe next time. It's a nice place to visit.
Yeah. Are you there now?
No, no, I'm here in Virginia.
Oh, okay. Okay.
Mhm.
So
But I go more often there. I
gotta
have family there.
have to go there. Got Jamaica. Got by. See. Me, I'm just regular old African American. That's it. Just well traveled. Just well traveled. Rochester. Okay. All right. I didn't know you was up there. Don't relate it to Jamaica. What you mean by that? Me, am I have Jamaicans? Nah, no Jamaican in my family. I don't really know a lot about my family history. Um, I think there's some Cuban, some Irish somewhere. Um, I don't know where or how. Think I think my great grandfather was Irish. Um, but I don't know for a fact because you know how the old people in the South, they don't like talking about history and stuff like that. They don't tell you stuff. I don't know why, but you know, they never told us about that. Okay, in Canada. Canada. Need to come up there for carnival. Need to come up there for carnival. We might be coming down to Orlando, Renita, to go to Universal Studio so we can do all the little haunted house joints. Hard working. I hope that's the part. Hope that's what it reminds. Hope so. Just gonna just gonna give it like 2 more minutes. Just waiting around for some more people to join. It's got about 18 people, 19 people right now. So just want to see if get a couple more people. So far, only got like 2 questions, and they're from Stacia. So only got 2 questions. Where everybody else from? Where everybody else from again? Where is everybody from? Got a lot of people from East Coast. Station said she's from Phoenix. Man, it's so hot in Phoenix. But it's dry heat. And it's so dry. I was there in the summertime last year, and I was running and working out, and like I couldn't keep the back of my throat dry because it was so hot. So hot. Brian from MIA, St. Croix, living in Virginia. That's what's up, Chris. Nigeria. Yeah, yeah, yeah. Gotta get some of your recommendations. Venice Beach. Khalil, what's up, bro? Gotta get some of your Afrobeat recommendations, man. Gotta, I done played Wizkid and Burna Boy to death, man. Who's my money on for the weekend? Man, I'm honestly more a MMA person. I'll do boxing every now and then, but I'm honestly a more MMA. But I'm gonna put my money on I mean I put my money on Tyson, I guess, man. He already really beat him twice already, honestly. So, I mean, maybe this third time he'll surprise Dante Wilder surprise, but the first time they gave it to Dante, but really he lost that fight. And then the second time, Fury like took him out and it wasn't even really clean. Look, like he really lost that fight. So I don't know, man. Yeah. Um, I want Wilder to win though. You know, I want him to win. Yeah. I'm probably coming to Orlando. I just don't know when yet. We want to go to the haunted houses, so at Universal. So I just don't know what date yet, but we might be down there. We talked about planning some. Liz, what up? What's up, superhero? Miami/Houston. Love both of them places. Cool, cool. Can you explain break and retest? Yeah, I can explain it to you, and I'm gonna give you a video that I just and some suggestions. Um, Kim, I'm gonna start with that question first, real quick. So,
Corey, one
one,
second before you go. I can't remember this morning that stuff you was explaining. I can't even think of the name. The phase. It was like in the middle. You draw some lines that you was explaining to that girl. I was coughing so bad I couldn't remember
It was
what it was
about the
called.
gap.
Yes, that. Can you explain that again?
yeah, I'll
Yeah,
talk about it. Okay, yeah, I'll talk about it. But just this is question about the break and retest. That one's gonna be quick, but it's really easy if you're looking really easy. So I'm gonna anybody got a pair other than indices they want me to look at? A pair other than indices.
you can look at Euro USD.
Okay. Give me 1 second. Do you trust the order box? Um, G. People said GU, GJ, AU, Silver. So it looks like GU wins. So we'll look at GU. All right. Okay, so GU. Heck, quick and easy. So break and retest, right? Let's use the replay tool, and we'll start right here, right? Let's say we have this high, this low, buy the break, sell the break, right? This is our 4-hour zone right here. Quick and easy. We'll go to the 15-minute, look and see if this breaks, right? So as this saying, this particular candle would not qualify as a break, right? This one, we got a wick rejection at the break of this level, right? This one, it broke it. You would want to see the next candle return to this level and then reject it, right? So this would be the candle. This would be the candle that initially notified you were at the level. This would be the candle to actually break as long as it actually breaks and close above this, right? This candle would have to close above this level, right? So we go ahead and hit the replay tool. So what we would be looking for is for this candle to open up, push up, drop, and then reject. Let's get a little more speed on that. Right at this point, it fails it, right here. When it opened up, the candle pushed down, it didn't hold, and it didn't reject. Even the next candle, it opened up, it pushed up, it failed and closed back in underneath the level. So this candle, this would be a bad example of a break and retest. It gave you what you were looking for as far as a break and close above, but none of the candles came and held this level. They all closed back underneath. So this would be an invalid. You can go ahead and fast forward it a little bit. On the downside, here's an example of if we were going to trade the break and retest of this level, which is the daily and the weekly level. This candle, let's say we had an alert at the daily, but we were looking to trade below the weekly, right? So we would expect for price to break this level right here. Say here, break this level, another candle to close below, reject this level and continue to push, right? Let's see if we get that. This candle broke it. Now, if a candle like this breaks it without a wick on the top, be leery of that because either it's just going to fly or it's going to be a reversal candle. So be leery of that. You want to actually wait for the next candle to close. This case, it just flew. Now, another thing you can do is in a situation like this, you can still take this, but you have to take a smaller risk. So I would not necessarily. So in this case, I would probably wait for our original level to break. The only way I would take this if price came back up to this level, tapped it and traded and rejected. In this case, now we're at our original level. We would have got triggered for an alert right here in these couple candles. But at these candles, none of them actually traded and broke this. They all pierced it, but they never broke and closed below. So we wouldn't have gotten a trade here. We can continue to let price go, still hanging around our level. Again, we got the candle to pierce the level. It never broke it and closed below, so we still not in that trade yet. Here, this come back to the weekly. So far, we had one rejection. Could possibly take the trade off of the weekly to sell it back down and look to trade through this. Let's see if we would have got that. We had one rejection already, 2 rejections, 3 rejections, 4 rejections, and you would have had the opportunity to get in anywhere along this, and you would have been able. This actually broke, and this actually rejected this level. You would have had opportunities starting from this candle right here on to this one and forward down into this. You wouldn't have been able to take that trade. And we would have only made it like right around the daily. That's okay though, because you would have had an opportunity to close out and profit, or you would have probably broke even on this trade because we went at least 20 to 30 in profit on this. Yep. 23 pips profit on this. But for the most part, it just hung around here. So moral of the story is, if you want to see the candles look like this, let's see a break. Candle close above. You want to see rejection, which is where you want to take your entry, and then you want to see expansion, just like this. It's going to look the opposite on downside. You want to see a break and close below. You want to see wick rejection, and then you want to see expansion. Once you see, oops. Once you see the break and close below, you're gonna wait for this candle to close. Then you're gonna want to see in a sell. You're gonna want to see the candle open up near where this closed. Then you're gonna want to see price from that point push up immediately back into this candle and start to reject, and that's where you're going to take your entry. I'm going to give you guys a video, some video recommendations. One is going to be to watch Kim's favorite videos under her favorites. That's going to give you how her session on how she marks up her chart and how she looked for her entries, right? And then I want you guys to go into the Discord, right? In the Discord, under resources, under trading resources, and then I want you to scroll up and look for this post on 12/19/20. This has a video that I did on what to look for good entries, bad entries, and ugly entries, and some other things on this session as well. But in particular, let me just copy it and drop it in here. Study this chart and study this chart. Yes, I have a YouTube. And then watch this YouTube. This is a gem. I'm actually proud of myself for this one. I ain't gonna lie. I've been thanking myself a lot today. I don't know. But this video example of GJ, let's look at it real quick.
As
Well,
long as we're not the ones being thankful, right, Corey?
Right, right. I hate when other people thank me.
Wow, I just said that about you, Corey, the other day.
I hate it, man. I hate it. This gives you a whole breakdown, good breakdown of, some examples right here and explanations. And then if you study this and watch that video that I just sent you, this will, I promise you that this will help you. Okay?
Looking forward to it.
Okay. All right. So let me get back to the chart. All right.
And
So-
Corey, that's in the resources, right?
I'll show you again. It's in the Forex Chicks mentorship Discord, under resources, under trading resources, and then it's the 12, 19, 20. In my Discord, it's under here under study materials. In one of these, I don't know which one of them I've dropped them in, but it's in one of those. So
Appreciate it.
mhm. Then all right, now we're gonna go down the list. Okay, so as how do we measure risk reward? For example, if I want a 3-to-1, what am I looking for? Cool, that's a good question.
Oh, I'm in my house. You session with Corey.
Huh? So for one, it's going to depend on what the setup is, right? If I'm looking to take a buy from this weekly or sell from this daily, right? Or
The worst band.
let's say that I sold from this order block area right here. So higher time frame order block.
Hey, Corey, what question are you answering? I'm sorry, I had to step out.
This one is how do we measure risk reward?
Okay, great. Thank you.
No problem. So in this case, let's say you were looking to take a sell if price came back to this area, right? Or in particular, this area right here. I like this area. Let's use that one. Because this would have put you in some drawdown. Right. So this would have been our sell area, right? And let's say we're going to be looking to sell the rejection here, right? And we were going to be looking for an entry starting at this point, right? A good way to use this is you want to use your long and short positions, right? So we're going to say we're going to go short at this point. My stop loss would be maybe, let's just say this high or above here, right? For me, for you to take this trade with 3-to-1, you would need to be looking for price to come all the way here, roughly about here, right here, right? This is a 3-to-1 setup right here, meaning 3 of these blocks makes up this entire block. That's the easiest way to look at it, right? And when you're looking for this kind of setup, you need to consider your lot sizes as well, right? Because this is a 50 pip stop loss. You're looking to gain 157. That can be done, but is this realistically a target for this move? Yes, no, maybe so, right? So when you're taking these kind of setups, you always want to look for what's going to give you the highest potential, right? So once you get inside of this area right here, right, where you're looking to sell, it came up here, rejected. But then when it got here, it kept pushing up some. So in a lot of the cases, you can drop down to a lower time frame. This is a 4-hour chart that we're looking at. Let's look at the 1 hour. Is there anywhere else we could have took this from that could have lowered our risk? So it pushed up, we came back up to here, we almost made it to the weekly. One place we could have noticed was this rejection right here. What we could have done was raised up our entry here, and we have the opportunity to increase our risk reward ratio, because now we've seen that it rejected here, it made a low here, and we started to push up. If we still felt like it was going to possibly push down, we would have noticed this candle pushed down, these candle pushed up and reject, but then this candle right here would have gave us an additional opportunity to get in. We could have got in here, 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 or around this area, and we would have been able to lower our risk on this trade, giving us a higher probability. Now, if we got in anywhere around this area, right, we would want to use our stop loss of, things just freeze. Can you guys hear me?
Yes, we can hear you.
Okay.
Yes.
Okay. So seeing that we have actual downward movement and it's not rejecting, this would be another area you could consider. You can use a break and retest here below this candle right here, or you could get in at the high here. You have the opportunity to reduce your risk on this trade, right? And as you're reducing your risk, you're also increasing your reward, right? If we were to get in here, this will reduce our risk from what was once here 3-1 to now near 5-1, right? If we got in higher, closer to the high, we now reduced our risk from 50. We just went from 50 pips to 40 pips to now 20 pips. And we also increased our reward on this trade. So a lot of times the recommendation is just making sure that you're patient and making sure that your setup meets a requirement that I know that if I take this trade, I could be looking at a potential trade that's going to give me more than that 3-1 or up to 3-1 ratio. Because even if it comes back down to here, we're still 2.6-1. If we sold from here and we took this low out, we traded back to this order block, that's still 2.6-1. If we came down to the weekly, like it did, right? It came all the way down to the weekly. You're looking at 4.33-1, right? Trading from here puts you at a 1.5-1, right? But look at what it does to your risk. Now you're risking 42 pips versus up here, you'd be risking 20-something pips, right? So your setup is going to always give you the standards for your risk reward. It's going to give you the basis for what you should be expecting for your risk reward. So you want to make sure that any setup that you're looking for is going to give you the potential for a high risk reward ratio. You want to make sure that you're trading like rejections. You want to make sure that you're trading with the trend of the market. If you're going to take a reversal, you need to take reversals at high probability areas where you could see price turn before, or where you've seen price trade through on major support or resistance level. So I hope that answered that question. Hope that answered the question. The next question, did that answer the question? No response. So I hope you got that. Let me see. Okay, cool. The next question is Fibs' question. So Fibs, you got to get used to using higher time frame moves, right? I like for you guys to get comfortable with this higher high, lower low indicator, because this will give you basically where you need to put your fibs, right? You guys see this high, this lower high, and this low, right? That's the major move on the daily, right? Major move on the daily, right? There's also this intermediate move from this high to this low. We'll get that on a lower time frame in a second. But we starting from the daily. That's the major move of the daily, right? It's up to you as to which way you draw it. I used to say put it in a direction, but it's kind of up to you and where you think. But your main thing is going to be paying attention to these golden levels and the 70 and the 786, because that's where you're going to get your primary moves from. Really, anything above 50% to the 786 is where you're going to get most of your moves from, right? So we got the major move, the major swing is this high to this low. On the 4 hour, we have this swing from this low, this lower high to this low, right? That's another move you can account for. And then you have this low to this high right here. So you don't have to necessarily draw each of these levels or each of these fibs, but you need to know and understand that each one of these is its own impulse, right? The time frame determines how strong of an impulse you're actually dealing with, right? If I am dealing with a daily swing, a daily move, right? And I get to a daily level on the fibs, right? I need to understand that there is a higher probability that you'll see price react to that level, right? As I get to a 4 hour fib level, it's going to react just as well. But the lower the time frame, the less probable the fib levels are, right? You could focus on these swings right here, right? 1, 2, 3, 4, right? But the main move is the one from the 4 hour, from this low to these highs, right? And we even got a reaction. Let's delete some of these fibs. We'll focus on the main move. On this intermediate move from here to here. Price came down to the 618 right here, and it's holding. You'll also notice that inside of this, we have some smaller swings. You want to take a look at this. We had this low, this high, price reacted off to 2, 3, 6, right? This high, this low, price only came to the 7. But again, like I said, you don't want to focus on these smaller moves. You want to get those moves from the 1 hour, 4 hour, or the daily. I don't recommend going lower than that, but you can, but the probability is less likely on those lower time frames, because you might be taking your trades based off of a lower time frame, but the level that it reacts to may need to be lower or higher depending on where you are within that market, right? So
Okay, so sorry to interrupt you. So can you draw that again from that lowest low to the highest one, and then explain to me what what are you looking for? I know you said to look at the numbers in gold, like look at 50, 70, but what am I looking for within those numbers? Am I looking for it to go up or down, or I just don't understand what we're looking for once it's drawn.
Okay. So there's going to be key points in your fib levels, right?
Uh-huh.
You're going to have these three primary areas that you need to focus on. Sorry. You're going to have three key areas. You're measuring your impulse. So your impulse, depending on the direction of the market, and we're in a seller's market, so we're going to start with supply. Next area is demand, right? And then this is what I call a kill zone, but most people call it your golden area, right? And at these three different points, this is where your selling pressure starts, right? Your supply zone. That's where sellers have been camping out based off of another short-term move right here. You had sellers camping out from this area, right? Once you see your impulse take you down, this is where your newly found demand zone, right? At this particular level, for some reason, there were buyers camping out right here. And this becomes your indecision zone, right? This becomes the zone that I call the kill zone, because at this point, it's either going to kill your trend or it's going to kill the reversal, right? And from this area, you're likely to get a continuation or a reversal pattern within this area right here. Of course, you can trade outside of these at these levels, but these are the primary areas that you would want to look out for. And I like to start looking at 50 to the 786. Those are where you're going to get your most profitable trades from. And
So
that's
with-
also, go ahead.
So with where that last candle is, how it's right below the gold, the kill zone. So then if I were looking at this chart right now, if it went up and touched the edge of that gold zone, then would I want to buy and take profit at the top of the gold zone and then watch it for a possible TP2 as it goes towards the supply zone and then wait for it to come back down? Is that what that means?
That is a possibility. However, you'll have to focus on what is the general direction of the market.
It's going down.
Right. So if it's coming to one of these levels, you could buy it to one of these levels, but your expectation, especially because this is a daily, we would more so be expecting this to sell off at some point, right? So you could buy from this gold, from this 382 to the 50%. You could definitely do that. But you need to also be considering the fact that once we're here, there is a potential for this to reject for a sell here, right?
Okay. So you're just watching for what it does when it's within that gold zone then.
Exactly.
I see. Okay.
Exactly. And this is from a daily perspective, right?
Mm-hmm.
This move, this right here, this high that my candles on, my pointers on, down to this low is a move on the 4-hour we need to consider, right?
Okay.
That's this area right here, from here to here. So in the short term, as we get to this golden area on the daily, right? We also had this higher, this lower high to this low that we could measure and see if it actually responds in here. We would have got an entry right around here at the 70% of the fib level. So let's take the daily fibs off. Let's take the daily fibs off, right? And now we're only going to focus on the 4-hour move, right? So as we enter this area from the daily, we can now see from the 4-hour that, okay, we made a 4-hour impulse from this lower high to this lower low. What is the direction of the market?
It's going down.
Right. So we know that selling pressure is on, right? So if we took, once we got to this level, would it be a better trade for us to buy at the daily 382 to reach the daily 50% around here? Or would it be a better trade to wait for the buy and take the sell from the daily kill zone?
Yeah, it's better to wait and watch for it to go up and then start to go back down. And then that's when you sell.
Exactly. So all of this information that we would have gotten would have told us, hey, we have a daily kill zone. We have a 4-hour impulse swing, and we reach the daily zone to sell is setting up, right? And on the, if we take the same approach, this is our supply. This is our kill zone. This is where our demand is on this move. Right? The supply from the daily that's up here shifted to this area right here. So those same people that sold up here saw that, oops, I can sell down here, right? Now they're trying to collapse another area, right? They've moved that supply down even further, right? So they've taken the supply that was here and moved it into this area right here where it sold from. And that's where now that's why this is an indecision zone, this kill zone from the daily. That's why it's an indecision, because either you're going to have the supply shift from this beginning of this impulse and move into this kill zone, or you're going to have the demand from this low to shift up inside of this kill zone. And you're going to have people buying here. But if the number of sellers selling inside of this zone outweighs the number of buyers in this zone, you're going to have the demand shift back to here, because this is the last place it knew that it could buy from. Got it?
Yeah. So the kill zone, you could call it the watch zone. Like that's what you're watching for to see what it does in there. So you shouldn't trade in there. You should just be watching to see what it does and then make your trade based on the direction it goes while in the kill zone.
Pretty much. You're going to be looking for, once it's in this area, you're going to be looking for candlestick patterns, rejection patterns inside of this area to confirm that it's time to go.
Gotcha. Thank you so much. That was such a great explanation, and I have such a better understanding now. Thank you.
Awesome. Awesome. Glad you got that.
So if it breaks the 6-1, is it a reversal?
If it break and close above this,
The 6-1,
above or below,
above the 61.
you're actually, you okay to still take that trade. I will take trades up to 786. I'll take trades up to 786. That's another strategy that I typically use, but I am okay with taking trades up or down to the 786.
Okay, thank you.
That's actually my favorite level to take it from, because that's going to give you the best risk reward, like we talked about earlier, right? Clear off some of this, right? If you take, usually what I do when I take the trades from these levels, right? I'm going to use either the next fib level or the next high, previous high, as my stop loss, right? So if I took a trade from 618, right? Initially, maybe I want to say that I would go use the 70 as my stop loss or the 786, right? If I did that, right, my risk reward will look something like this. Here to here. It's 28 pips, right? And I'm gonna at least look to take it back down to 0, right? That's gonna be my goal, right? But let's say I decided to go early, right? And I got in at the 50%, right? I'm gonna use either 618 as a stop loss, 70%, or I'm gonna use this high. Look what just happened to my risk reward now, right? I just went from what was almost 8-1. Now I'm down to 2.5-1, right? And if I got in at the 38, right? And if I got in at the 38 and I use this high, look what just happened to my risk reward. I just almost went down 1-1. I don't want that, right? But if I'm taking it and watching it and letting it be patient, 618, maybe I take it from the 70, right? If I took it from the 70 and just waited, right? Or around the 70, right? I'm dealing with almost no drawdown, right? Almost no drawdown, right? And my final risk reward would end up being, for the overall profit target, 40-1, almost 42-1. And even if I don't actually meet it, right, I would have known, all right, cool, I could trade it down back to this area right here because it's a weekly or the daily. Even with those areas, right, that's 10-1. That's 18-1. Trade it to this fib level. That's 27-1. Trade it to this fib level. That's 34-1, right? And if it goes to the 0, right, that's 42-1, right? I don't have the extensions on right now, but roughly around here is the next extension level. That's 50-1. This is also the next extension level. That's another 60-something-1, right? And if it does a full symmetrical move, which we can figure out right here, symmetrical moves from here to here. That's 377. Let me just draw it out. Symmetrical move would be from here to here. We get that same move from here to here, right here. We would have got that same, if we get this same move, this is what we'd be looking at. 60-1 pretty much on that trade. And the more patient you are, usually the better your entry is going to be. Usually the better your risk to reward is going to be. Right? Cool. So I think,
Hey, Corey, can I just have a look at your fib settings, please, bro, so I can take a screenshot?
sure. This is the default fib settings.
Yep, got it. Thanks, Corey.
Okay. And then supply is between 100 and 886. Demand is between 12.5 and 0. Kill zones 618 to 382. Keep in mind you can trade from as high as the 786 and the 70. Keep in mind you can trade from as low as the 236, depending on how you draw your fibs. And like I said, I use a different version for my entries that I would have to go over on another time, but I've probably gone over it before. So we're gonna clear this stuff out. And then let's see what we got. Do you trust your fibs over the support and resistance and order block? Your fibs are usually order blocks, support, resistance zones. They are in line with fib levels. They are usually in line with key order points. I can draw you fibs on this, right? Let's get the fibs back. Right here, right? And what is this again? This is supply, right? Okay, so we see supply, right? This is an order block right here. This is an order block right here. This is a higher time frame order block. Where are we selling? From that order block, right? This has an order block in the supply zone here, right below it here. And where did we eventually sell from? Back around this, right? And then let's look at price levels, right? That's a major whole number, 37 flat, 1.3700, right? What's up here? 1.3750 is right around here, right? Major area, right? Fib levels, right? That's here. Let's go inside of the kill zone, right? Here is a 618, right? This level right here, 1.361960. That number is plus or minus 10 on each side, plus or minus 10, 20 pips away from 3625, right? We're almost aligned with key levels, right? What is the 50%? 50%. That is 1.3584. That's plus or minus 10 of 1.3575, right? Major level, right? What is this level? Plus or minus 1.3550, right? That's plus or minus 10, right around these areas, right? What's also right here? That's an order block, right? That's also an order block to the reverse side, right? So we can keep going. At the 2-3, don't really usually typically look for trades, but plus or minus 10, there is a whole number, quarter number right here, right? So this is 34.93. That's plus or minus 35. 1.350, right? So every fibs, order blocks, support resistance, all that stuff is conjoined. You can't take away one or the other. And you have to be able to recognize all of this at the same time. Let's go to the daily chart, right? the yearly price, the yearly opening price, open up at 36645. That is plus or minus 10 of a major whole number, right? That's plus or minus 10, 366, no, 3650, right? That's plus or minus 10 or 3675, you know, however you want to look at it. Where is this low? This low is plus or minus 10 of 340000. And it's also a fib level, and there's an order block near this level. This monthly, there's an order block near there. This weekly, there's an order block near there. This yearly, there's an order block near there. And that order block is giving it direction. This order block is one that's a bearish order block. It's giving you the direction of the market to say that it's going down from here, and it did. It went down. And when it got back inside of this is really the order block. This is one from that you can like also trade to as well. But this main one right here, we've already tried to sell off of it. That's already near a key level, key price level. So Brian asked that, and I hope that answered that. Hope that answered that, Brian. You know, if he's still on. Nope. Okay, cool. Let me read back up through the charts. Tyreek. It's the last one that I got. How do you draw major support, resistance? What do you look for? That, Tyreek, I think that the conversation I just had, that answers that as well. Did you get that out of that, or should I go even further? Okay, got it. Cool. Okay, if you're looking for, like I said, if you're looking for major support resistance areas, these are the kind of things you want to look out for. You want to see price turns twice here on the daily, right? Price turn 4 times here on the daily. You know, this area right here is going to be one that you might look to reject or buy from, right? And we had one price rejection right here, right? So if we were doing break and retest, this is what some of the things that we would be looking for, right? But I take a kind of a different approach, right? I take a little different approach, right? So what I would typically do, and here's a quick way to do this, right? If you want to do a break and retest strategy, I'm gonna give you the quickest way to do this, right? So where is current price? Right here, right? On the daily chart, find the the most recent high, the most recent low. Sometimes it won't look like this, so you'll have to take a different approach sometimes, but this is your most recent high, that's your most recent low on the daily. Then on the 4-hour, you're going to look for, again, where is price? It's right here, right? Where is your most recent high and your most recent low? The cool thing about this one is the indicator that I recommended that you guys use, it gave you the high and it gave you the low, right? And we can use this same low from the daily on the 4-hour as well, right? So this is our 4-hour and daily low. Four-hour and daily low, right? Also, where is our most recent high? We don't technically have one on the 4 hour. We have this one on the daily. So let's drop to the 1 hour, right? Where is price? And where is your most recent high? This lower high right here. Right? I'm gonna mark this off. This will be our 4 hour and 1 hour high. Right? Now, inside of here, we're going to be looking for our entries off of the 15-minute. Let's measure this range and see how big this range is from here to here. So 40 something pip range. I would not technically break this range down any further. I would be okay with trading this range of 50 pip range and let price fluctuate until it breaks out of this range. I would personally be okay with that. But if you wanted to go even further, let's say we go to the 30-minute. There's no real low being made here or high. Let's go to the 15. Same approach, nothing here. So this is the best range out of this. So you would be looking to buy out of this range, out of this high, sell out of this low. And if you notice, I use the highs and lows from the indicator to basically set the highs and lows of my range. And that gave me my breakout area. And then as far as targets go, you're going to look for rejections, right? I typically say my goal is usually to trade to the daily or the weekly high or the daily or weekly low, right? In this case, we can use our monthly as our target for the sell side, right? As far as targets go, you would probably want to, take your cursor from where price is on the sell side, drop it until you get a reaction. This would probably be my first target. And because this little area of rejections right here, probably make it right there. From here, I'm going to take the same approach. Where is there a rejection? Right here, in here, in this area, with this candle and this candle. That will probably be my next target right here. I would probably leave it with here, or I would slightly pull this up here just to be on the safe side. For the buy, take the same approach. I'm going to take my cursor, move it up until I see an area where there's evenly distributed rejection. So we got some wicks here, we got some wicks here, we got some wicks here, we got some rejection here. Let's split it and put it somewhere along that area. That's going to be my next target. Take the cursor, do the same thing, evenly distribute rejection. We got some wicks here. We got some right here. And then we got this high right here. So let's just take him, move him here, or we could split it. Let's just split that and move it here. And that would be my targets for a trade set up like this. So as long as it's between here and here, I'm not touching it until it breaks here or here. Capiche? Capiche? Got it. Hope so. Let's go. Okay. Even in YouTube and your channel. Yep, I have YouTube. This is a redundant apology. This is from Khalil. Let me see. I don't even know if you're still on here, bro. You still on here?
Yes, sir.
Okay. So Khalil's question was here. This is redundant apology. Repetition is the mother of learning. please go over the red candle entries again. Red slash red.
That's what you
Rebalance.
call them,
delivery.
rebalance, redelivery, yeah, those.
Okay, cool.
Rebalance, redelivery.
Yeah, cool. So rebalance, redelivery, right? What good rebalance and redelivery looks like is I see some good examples over here in this area and over here and no, not over here. Not over here, but over here. Right here. So we're going to focus on these two areas right here. This is when you have balanced price action going in both directions, right? And what you're going to be looking for is this situation, right? In a sell setup, right? In a bearish market, and you're expecting price to continue in a direction, one good sign is when you see a situation where you have a candle with a wick like this. Can you see that wick? Can you
Yes.
see it
Yeah,
as a-
yes.
Wait, would you make it darker or
Yeah, I'll
something?
make it darker. Okay. If you're in a bearish market, you're going to be looking for a candle with a long wick to the downside, right? Your next candle you want to see is a candle that follows it, that trades through that wick, right? Trades through this wick to some degree at some point, right? And the candle or series of candles that follow that, you're going to want to see that price does not close above here and stays within a range between here and here, right? Between here and here. You're going to want to essentially see that if I'm in a bullish market, price opens back up on the following candle or within the next couple of candles, price opens up here at this high, at the body of this candle, pushes up, right? And eventually rejects back to the downside at or around this area right here, right? And you will want your candles to reject and look like this and not close back above this candle right here. So this is going to be usually the best setup out of this. It's a 3 candle setup right here. I'll show you a couple of examples. Right?
This is for rebalance, redelivery?
Yep.
Okay.
This third candle should not go inside this body, right?
This one.
Yeah, it should not go up in that range, right?
No.
Initially, it will.
Not be that long, right?
Initially, it will have to go in there, right?
Yeah, it should go, but means it should not close inside that.
Right. Initially, your candle is going to open up near the body, near the close of this candle, right?
Mm-hmm.
It should start pushing up immediately, right?
Yeah, to
And
make.
as it's pushing up,
Mhm,
once it gets to or around this area, right,
mhm.
it should not break and close above this.
Yeah, exactly. Mhm.
It can do it right now. Sometimes depending on how lenient you are, you'll let it come above or at the body high, or the opposing wick, because maybe this candle has a good wick on the top side, right?
Mhm.
And that'll be one of the areas you can look for as your stop loss, right?
Okay.
And as long as it doesn't break and close above here, that could be a stop loss. But eventually you would want to see that this candle open up.
Down.
You see some back and forth action. It does some of this stuff and
Yeah.
come up, pop, and then it drop and
Mhm,
expand,
mhm. Got it.
right? That's exactly what you want to see, right?
Yeah.
So let's take this area right here and zoom in right here. Hold on. You'll see some of that action right here, right? We had this candle right here. Here's the body. And here is your range right here.
Yeah, this is perfect example.
Perfect example right here,
Yeah.
right? You have long wick to the downside. You have high volume trading through the wick. Candle opens up. This candle open up, push back up into this area right here. And
Yeah.
you're focusing on this area right here. Right?
Yeah. Mhm.
He came in here twice, right?
Yeah.
Right here and right here.
Mhm.
But once it rejected, what do we get? Expansion.
Right.
Expansion, right? And it just it ran away from this area, right?
Mhm. Yeah.
Here it is in reverse, right?
So
Hey,
it
Corey,
can be
excuse me.
anywhere, right? Means for this, I don't need to look for imbalance candle. Is it?
No, it's created imbalance.
Yeah. Mhm.
Hey, Corey, before you move too far away from that, what do you look to enter after you get that rejection on that third candle?
I'm actually looking to enter at the body right here. Right here is where I'm usually looking to enter. And
So,
this
so you're
is
taking that entry before that candle close. So when it come up and touch is when you're looking to enter.
there is a couple ways you can take this. You can take it at the top, or you can let the price trade up to that area, put your order underneath it, and let it reject, and then just drag you into the trade. That's the safest way to do it. The safest way to do it is let this candle happen, let this candle happen. When this candle opens up, you let it push all the way up to this point. Then as it gets to this point, you go ahead, put your sell stop in right here.
Nah, smart. Gotcha.
And in a tight stop loss could be at the high of the last candle or from here to here. And then you would be looking for whatever the expansion is, right? You could use this last candle as the stop loss. Right here and right here. This would be a tight stop loss. This would probably be your primary stop loss right here. The high of the last candle, or the low of the last candle. And this is a sell example. A buy example is right. It's a couple. There's a couple buy examples.
Corey,
Yep.
so would you only look for these candles on the higher time frame?
Nope. I use these anytime I feel like it, to be totally honest. If I see something and I want to just add on and stack, maybe I missed a move. This is how I would get in.
Yeah,
I will
'cause I
drop.
see those things popping up everywhere.
Yeah, I'll drop this on at any given moment, man. If it look good, because at worst case, the lower the time frame you do this, the better your entry will be. The lower your stop loss has to be. But it is you are trading in the middle of a move, right? So like I said, sometimes I would take it from the top, or in this case, the top, or I'm looking for it to trade in lower. If I'm being aggressive and I'm pretty sure, like, let's say, here's the thing you want to add into it. Am I bullish with a catalyst to say that this is going to keep going up? Am I bearish with a catalyst to say that it's going to keep going down? Yes or no? If it's a yes, like today, bullish with a catalyst, right? We had rejection. We were down already. We had good news about the jobs. We had a push down and a rejection. Buy, right? If I wanted to add on to some trades in that area, this would have been an opportunity to do so, right? Bad news, cool. Trump tweeted again, right? They gave him his Twitter account, and he said that, he has decided to oust Biden as president. That's bad news, right? The market will drop because it doesn't know how to react. The first thing it's going to do is it's going to react negatively because they don't know whether it's a good thing or a bad thing, right? Market going to drop, right? You see this in the middle of a move somewhere, this is your time to say, boom, let me take a setup like this. You have your wick, you have your candle trade through, you have price come back down to it. If you're being aggressive, you can wait and let it tap this high, or put your sell, your buy limit here or here, and just let it come in, tap you, take you through. Wait till price comes down further into this, tap you, take you through, or wait till price come down further into this, put your sell, your buy limit, a buy stop above this, and just let it pull you in. This one is one you would have had to manage manually because it only touched it and ran, right? Over here, I thought I saw one over here.
Even this is one. Yeah.
Thought I saw one. Let's say you saw this rejection down on these candles already. You want to be a little high risk, so you use this situation right here. This would have been one that you would have had to be a little more patient with, right? You're going to use this candle, this trades through it, this candle comes down, trades through it, but holds it, right? If you think that this is a valid rejection, your buy stop is here or here. Once price gets below this, you also can market execute, right? You can market execute here, or you can just say, okay, I see it's rejecting. It's coming down into this wick. If it holds, I put my buy stop here, I'll automatically get pulled into this trade. My stop loss, again, high probability. If we put our order in here, oops. We're putting our order in here, our buy stop here, stop loss here. Targets are, I'm trying to get to the next high at least right here, right? If it breaks that high, I'm trying to get to the next high, right?
Can you go on lower time frame and tell me where will you enter?
On the lower time frame,
Yeah.
in
Like
this same area.
Yeah, 15 minutes.
Here's a good example of it failing, right?
Mm-hmm.
You would have thought this was going to keep going down, right?
Yeah.
It traded through it.
Mm-hmm.
It traded through it, right?
Yeah.
It finally traded through right here.
Yeah.
This candle opened up, but once it got back to this area, it never rejected. So you would know, okay, I can't take this, right?
Mm-hmm.
I can't take that one.
Yeah.
In this move up, you didn't get any real rebalance, redelivery setups over here. Nothing clean, right?
Mm-hmm.
Nothing in this move on the lower time frame was clean, right? Let's look at it, right? This area right here. It missed it. It tried to come back. It missed it, right?
Yeah.
Nothing over here. Nothing over here, right? Nothing over here. Yes. You don't get that situation until you get to here.
Yeah.
Right here, it finally traded through, pushed all the way up, came back right here and gave it to you. Little more riskier though, right? Little more risky.
You say riskier because it was took more candles in the 3 that you like?
Higher, just because of how high it is.
Okay.
Let's go to the 5 minute, same area. There we go. Let's see. Do we get anything over here? Nothing here. We got it here.
Yeah, this is here.
We got it on the next candle. There's your rebalance right there.
So when you get this kind of means on 5 minutes, then you can pop it also, right?
You can, but you gotta, in a situation like this, you need to make sure you're confident about the direction,
Mm-hmm.
because you could be reacting to higher time frame moves, right?
Yeah.
So you had it right here. You had it right here. You had it set up right here. This missed it, but I would still count that.
So Corey, let me clarify this because this is the first time I'm hearing this from you. So you mark the opening of the candle and the wick,
Mm-hmm.
and then you wait for the other candle to reject, right? That will be your entry.
Yep.
Okay. Thank you.
Like we said over here on with the drawing, you're looking for this on the downside. On the upside, you're looking for this. It's gonna be your first candle. Right here. You want to see the long wick. You're gonna want to see that when the next candle open up, it can have a wick, right? It can have a wick. You're gonna be looking for price to hold this and this. Trade through it. Let me just make this blue.
You know, Corey, I'm not a scalper, but if I was to be a scalper, this is how I would scalp.
Oh yeah, it works for scalping.
Yeah, man.
It works for scalping.
Now I only do it on at 15. I'm not brave enough to try the hour yet, but maybe after some more back testing, I get brave enough.
Yeah, it works for both. It worked for really any time frame. The only thing is, if you're looking at the higher time frames, there may be a delay on this because you might be looking at a move that you have to wait for, you know? So you got to be patient, you know? You got to be patient. So for a buy, that's what it will look like. For a sell, that's what it will look like. Your primary focus is that it doesn't close below here. Stop loss here, right? Your trade setup would look for a long. You'd be looking to buy from here, trade up to the next high from here. Stop loss would be below there, right?
Mhm.
In the reverse, you would be looking at no higher than this. Stop loss initially at least here, and you will be looking for the low associated to this. That's how you would get that entry. Cool beans?
Corey, do you mind sending a snippet of this?
Screenshot? Gotcha.
Yes, thank you.
Excellent thing, my brother. I'm not going to say thank you because I know you don't like it, but I'm going to give you your props. This strategy right here led me into one of my best trades of the year.
Oh, wow.
Yeah, man, this thing just, I love this right here. I just want you to go over it
Oh,
again
wow.
for me.
That's what's up, man.
It's the question for the time frame, because with the lower time frame, to me, it's so noisy sometimes. I can't figure out what you was explaining, but now that you draw it out, I learn better visually, so it makes sense. Thank you.
Makes sense. Yep. It will make sense. You can do this from any time frame. You can do this from any time frame. And I think the last question that I got is, how do I use fib extensions? Well, is think about fib extensions. Think about fib extensions as being the same levels as the original levels, right? Your fibs, let me drop this in there. Your fibs are basically the same number sequence repeated over and over, right? So one of the fibs that I use is this default fib level, right? You can add in the 114, you can add in 27, but these are basically the same levels, 100 to 200, that you would look for between 0 and 100. If I put the negative levels, I would still be doing the same thing, right? There would be a kill zone, there will be a supply zone, there will be a demand zone within the 100 to 200 levels. They're going to be exactly the same, and they will have the same significance as those extensions, right? Another fib that I use is for like my sniper entries. Let me drop this one in, right? This one particular, I do have extensions on there, right? And in this case, I'm only focusing on certain levels and I'm using the extensions as targets, right? And if I took a trade from the 78, my main target would be 0. I would take the biggest partial that I have out of that trade at 0. I would take another partial at -2.7, another partial at the -128, on 1 to -1, the -618, and then I would be looking to take it down to -100, right? Works the opposite. So that's basically how you would use the extensions, right? If you understand everything within 0 to 100, you understand everything to the extensions. They can be used as targets. The extension levels can be used as targets. And a lot of times, if you're looking at like a daily time frame, right? Or weekly time frame, right? Let's say that we measure this move from here to here, right? Just using the default fibs, right? We actually don't have to touch the fibs anymore. 0 to 100 is this impulse, right? We would have hit 127, 138, 150. Where did we get our rejection from? Around the 150. Almost hit the 168. We could be looking at targets at the 200. We would just have to understand, okay, here is my 100, right? I got a retracement to the 38, okay? That's where I'm going to find the next high, which is here, right? I'm going to use this level, right? From here to here. I'm not going to touch these fibs, right? Because I know this move right here is off of the daily, right? We would have made all our targets on the way back down to get back to the 100 and this 100 lines up with this 50%. That's where this rejection started from, right? So all the extensions they're simply the exact same levels from an extended point. People typically use 168 as a target, 150, 138, 127 as targets because they know that those levels are the goal level, the kill zone repeated. It's a decision point. And because they trade with algos that are based off of fib levels, you can typically get trades that are in line with fib because they have algorithms that are based off of these levels. So go ahead and grab a screenshot. The extensions are down here, and to a couple of them, they're basically right here and on down. for the default, my default fibs. And so on that note, I have to run because I gotta go pick up some stuff from the store. And
Hey, Corey, can I give you some more props before you pull out?
oh, no problem, man.
I gotta give you the props. The only way I trade right now is when I come into the market, I put on, I look for order blocks. All right, I mark those order blocks up, and then I put on your fib, the order block fib. I use that same order block fib, and I switch it using your target fib. And all of my entries, I'm looking to enter off of that 70%. Well, when I tell you all my entries are like 90% to 90% of my entries right there, you know, I've learned to let the market chase that money first, you know, to fake out and then come back. Is either going to stop there, and you really helped me with this. And if you look at US 30 before that last run, it came down, it smacked that 70%, it just touched it and just ran. It did it like 3 times. It gave you 1,000 pips. And the last time it did it, it came close, but it hit the 618 of a fib and kept going. So, bro, when I tell you that 70% mark that you got, man.
Look at this. And then
that thing is fire, brother.
78, 70. We took another entry around here, and it hit 0. It hit -6, -27. Just hit -618, and we hit 100. So this is a done move right here if it want to be. But I hope y'all still in. I hope y'all didn't put a TP in where I put a TP in, which was here, and got closed out and missed out on this. But I was running around with the midget, so I couldn't watch it. So I just left it and got took out. But that's all good.
I did
All
see.
right. Yeah. By the time I got the alert that it was near the 250, the 50, it 2 minutes, 10 minutes later, it was already taking me out. So, you know, I didn't get a chance to take advantage of that. But yeah, you know, that's
Now this is going in another order block, right?
it's gotta go to one. It's gotta go to one or something. It's gotta go to an order block, it's gotta go to some area of liquidity, it's gotta go to some equal highs, which is at right now.
Yeah.
Or, you know, this is an order block right here. Let's look and see what time frame it's on. 4 hour. Bam, right here. Where are we right now? This is a potential area, right? But maybe it wants to trade through it, right? And if it does, we got equal highs, we got order block, right? And then outside of that, we have this area right here of mitigation block, right? Come back up into here. We also, I got it marked off already, this breaker. It's around 44.26, right? That's your area you want to look at next.
So you are expecting to go up, right?
If it does,
If
it does. I'm out of it, so I don't care what happened to it.
So Corey, I see that 4 hour order block. It could reject from there also. So if we see a rejection, we could sell from there.
You absolutely can.
Yeah. Okay.
Yeah. We already sold from there 1, 2 times, well, 3 times already.
Yeah.
And this may want to range. You know, it's been ranging. This is the first time I've seen a triple bottom on the 4 hour on indices. Triple bottom, 1, 2, 3, triple bottom. I have not seen that, to be totally honest. And I've been trading for a while, and I have not seen that on the indices on the 4 hour. I've seen it on lower time frames, but not on the 4 hour.
Yeah.
And I was talking to somebody else today about it, and they said the same thing.
So what does that mean? Mean that's they're gonna take that liquidity at the bottom?
at some
Republic.
point,
Yeah.
or they're gonna leave it for later. But whenever they do, that means it's gonna fall hard
Yeah, it's gonna plummet. That's what I was just thinking.
from it. Yeah,
Mhm.
because we got built up, we got liquidity that got taken out right here, and then they rebuilt it on these 3 drops. Right? So they left seller side liquidity up here. They left buyer side liquidity right here. They may take it right here. They may want to take it from these equal highs, push up, then drop. Or they may want to push up, take this liquidity and this liquidity here into this order block, and then maybe drop. I don't know. Or they may want to keep it going. I don't know yet. These equal highs right here, 86, 85. That's a key area to look at right there. That's buyer side liquidity right there. They may want to go back there, you know, take this liquidity, drop, you know. But I gotta run. I will catch y'all next week.
Thanks,
And,
brother.
Thank you so
Enjoy
much.
the rest of your weekend.
Bye.
Thank you, Corey.
let me give you guys the recording of this real quick.